Ladies and gentlemen, welcome again. Welcome to our Offshoring Lunch and Learn panel series. It's brought to you by ProfitMaster Global, providing premium offshoring solutions. My name is Paul Jantz, and it's fantastic. I mentioned it before. If you've just joined us and you're new, it's great to have you a part of this offshoring panel series. If you're joining us again and you've been a part of probably the 10 months that we've been doing this, it's fantastic to have you back. Now, big subject, big talking points, big risks. We're going to share them all with you today. So we're going to share a few things with regards to the actual Fair Work Commission case, or let's call it the upheld case, to do with this particular worker. And it's to do with, our whole subject around, engaging or hiring directly into a contractor arrangement. If you've got team members in the Philippines, we're going to talk about all of that, whether they're contractors and you've got them under a contractor arrangement, whether they're deemed to be employees. We've got some fantastic guests that are going to be able to share a lot of information with all of you online. So strap yourself in. We'll probably be online for about an hour. We've got about 50 minutes of what we'll work through in terms of our questions, and then we're allowing time at the end for questions. I've already got a couple of questions from all of you that registered right at the start. So you've got the ability to, we asked if you had a question. So we've got a couple of questions to work through, but you've also got a Q&A panel there. So if you've got anything that triggers you at the time that you'd like to put down, please throw it into the panel session straight away. And then the Q&A section straight away. And I'll make sure we get to those questions at the end of our session. Let me introduce you to our star-studded panel, which is important. I've got SLF lawyers, Rebecca Fay. Now, Rebecca, you are coming from Bali. So, Beck, it's great to have you online.
Yeah. Hi, everyone.
I've got Tax Assure's Michael Moon. Michael, you're in Sydney. I'm in Melbourne, but that's all right. How are you, mate?
Yeah, good. Very good.
Fantastic. And I've got ProfitMaster Global CEO, Richard Croker. Now, Rich, are you in Manila or are you in Clark?
In Manila, Paul, yeah. I'm heading to Clark today. Just after this meeting, actually, after this webinar.
Beautiful. And it just goes to show you that no matter where you are, I know Bali's what, 3 hours behind? Probably so is Manila as well, aren't you? You guys about 3 hours behind?
So Melbourne, yeah.
Yeah, I think we're on the same time frame, Richard and I.
Brilliant. Just goes to show you that we can all join at the same time and make sure we're producing good content, which is what it's about today. So thank you for you guys that are joining us. I think it's fantastic that, we've got a lot to share. So please, again, I mentioned it before, our topic is employment and ATO risks of hiring directly. Richard, I'm going to start with you. Mate, are you okay to take us through, let's call it the article, the ABC article? I think the case was brought to light probably around 12 months ago to the date, maybe. Are you okay to go through highlighting the case, how all this came about, and some of the risks associated with some of our Australian employers that are choosing to hire directly?
Yeah. So we actually identified the case back in about August of 2024, so over 12 months ago. And our clients were actually advised of that outcome some time ago. It took a little bit of time for it to be picked up around the traps, and then, as you know, the ABC picked it up just a few months ago. I think there's a reference to that case already on our website, but if you want to see the exact details, you could go in there. It was the case of a young lady who was working for a law firm, in fact, working for the labour company of a law firm based out of Queensland. And she was working as a legal assistant in the Philippines, and she was working under an agreement with her law firm in Queensland that meant that she was on a direct relationship with that particular company and was able to do work under their instruction and so on. Now, she must have been reasonably smart. Well, I suggest pretty smart, because she was terminated from that employment and took some umbrage to that and decided to test herself and the law firm in the courts in Australia to argue that she was, in fact, an employee of that particular law firm, and successfully argued that. And the consequence of it was that she was under the Fair Work rules and some other regulations that I'm sure we're going to talk about today. She became an employee of that particular company, and the company itself faced all of the penalties as a result of it. It was significant because it was the first time that that I know of that an offshore person had tested the regulations and laws in Australia and was able to successfully argue the point that she was an employee. Now, since that time, it's become quite popular around outsourcing and offshoring channels. It's not just in the Philippines; it covers any offshoring relationship. Needs to consider this situation, and that's where we are today. So, and what brings us to this discussion, of course.
Yeah, brilliant, brilliant, and thanks for that. And I think, you know, again, we've done a fair bit of, call it, shining the light on this particular topic, because I think almost every week I come into contact with somebody, and somehow the conversation goes around and comes to, oh yeah, we've got 15 hired directly, or we've got 25. Met a company last week, 25 hired directly. Wasn't aware of the case, wasn't aware of the implications. So it's great. Again, we've got Rebecca online from an employment law perspective to, again, as we continue to do this, we did this at Hamilton Island at the conference as well, where we had Beck and we had Michael as well on the panel talking about this. And there were so many people that just weren't aware of it. So again, if you're hearing this for the first time or maybe the second time and you're looking at how all this can work out for you, this is where we've got the experts online to be able to share that with you. So Beck, if there's things that you would like to jump in and share, please do so, because I think a lot of people online are looking at from a legal point of view and where we sit. Is that fair to say?
Yeah. I would say that that's where a lot of our inquiries come from in relation to this decision of Pascua and Doessel Group. But the way that Richard's explained it is effectively right on point in terms of her making this Fair Work claim. And the first question that the court needed to consider was whether or not she was an employee under Australian law, and that she was considered to be an employee under employment law. And the test for an offshore worker that was established in that decision was whether there was a substantial connection to Australia. And so the court examined the question of who exercises the day-to-day control of that employee, whose business systems are used to both manage, mentor and guide that employee, who the worker represents to clients she is and what her role is and who she works for, and the level of integration into the business operations. And this is why, in order to not be considered what's called the employer on record, using an offshore company like the one that Richard and Paul run, Profit Master, can get you around the current law as it stands. And so that's not the legislation, because the legislation's obviously been interpreted to apply to this case, but it's to get around the current interpretation of the common law, which is what the courts have said the legislation really means. And so someone like a Profit Master would be the one that exercises a day-to-day control of that employee. And Profit Master is unique in that it has a company incorporated in the Philippines, which is compliant in the Philippines, that has Filipino directors of the company as well as some Australian directors of the company. And so that would be the entity that would be considered when we're looking through the prism of just this case to exercise the day-to-day control over that employee that is being contracted to you. The business systems that are being used are Profit Masters, whilst they're obviously adopting certain business systems of the client that Profit Master has. There would be a mixture of business systems that are being adopted, some Profit Masters, some the on-contracted employer as the contractor. And then the worker can represent to clients that they act for or they work for the client of Profit Master. That's not going to breach And then the integration into business operations, they would be trained into the way that Profit Master does business. And they will also learn and understand Profit Master's client and what work as a contractor they are to do for that company. And so when you put all of that together, you work around this decision of Pascua, and you will be compliant as far as where we consider the law right now.
Okay, thanks, Beck. And I think, you know, there's again, I think Richard mentioned it before, for all of you that want to actually see the case itself and the results of the case, that is on our website. So I'm even happy to share the landing page with you, because we've got the actual Fair Work Commission decision, let's call it. That is all there, so everyone can go ahead and read that. It's online. You can do a search for it and you can find it quite easily as well, but it's also on the Profit Master website. And I think the critical factor there is just determining what you said there, Beck, in terms of who is the employer, which is the local employer, and then who the company is contracted with for the services, to provide the services. Is that how it's deemed, Rich? Just from a Profit Master point of view, how you put that through? Because I think a lot of people get confused sometimes. Well, the company that's engaging to get that person, although they're employed locally, is that how it's worked?
Yeah. So the way Beck's defined it there is essentially that. But you really need to consider it on a case-by-case basis. When people are setting up employer of record arrangements, they often try to cookie cut it to make it as cheap as they possibly can. And therein can be some of the danger. So the way Beck has described that as integration into the business, if I could just give one for instance, I certainly don't want to take away from this legal aspect of the discussion, but if I could just mention one aspect, for example. Often what you'll find is that an employer of record, such as us, has a client in Australia who wants to bring a staff member in, and the staff member comes in, but everything is controlled by the staff member. This is what we're talking about with integration. So the computer is supplied by the employer. Their timesheets are kept by the company in Australia. Timesheets are kept by the company in Australia. They have an email address for the company in Australia. They deal directly with the company in Australia. There's no in practice, there's no relationship with the company organisation itself. It's just purely a relationship for employment. So some of those things can go to the test that Beck was talking about and make it a little bit less clear than the way Beck has described it. So my view is that you have to do it on a case-by-case basis. And just look at things like email addresses and so on. They will go a long way to boosting the weight of the argument that you've got that it's actually an independent, non-employment relationship.
Yeah.
And I'd like to discuss that a little bit more, by the way, later.
And I agree with you. We're gonna get into that a little bit deeper, that's for sure. I might stay with you before I go to Michael just quickly though, Rich. There's a lot of different risks here as well, and we've just spoken about the employment one. We're going to talk about an ATO one very, very soon as well. But what's your opinion? Are there reputational risks at play here as well?
Look, for sure. If I could use the Institute Chartered Accountants or the accounting profession in Australia, one of the things under our professional standards, our ethical standards, is that we're required to tell our clients that we're using an outsourced relationship. Now, in a direct relationship where the person offshore is just working one-on-one with the company in Australia, there's probably a higher incidence of the accounting firm not actually advising the client that work is being done offshore, even though it's a requirement of the ethical standards of the profession. Whereas if you're working with an employer of record, well, it's quite clear because there's a service agreement between the Australian company and the offshore company that indicates that there is an offshoring relationship. So there is a clear obligation to acknowledge to your client that you're using offshore services. So one of the reputational risks in both cases is that the accounting firm hasn't told the client that they're using offshore, and then a problem arises. So that's one operational risk. But then there's other operational risks, which from a practical point of view go to things like information security and so on. So an employer of record or even a direct employee will not have the security over the information systems that are provided by a higher level of professional offshoring service. So, and just for instance, it might be in terms of somebody working from home, or and they have they don't have a VPN when working from home, and they have a non-safe internet connection and things like that. Something goes wrong, and they're required under the privacy principles in Australia to actually report that. Now, you don't have to look very far to see where that has happened with people even from the Philippines. I mean, we've seen some very serious cases of data breaches. Now, those, of course, have a reputational risk, and I suggest that for a medium-sized accounting firm, higher and lower, that if you have breached your client's confidentiality totally inadvertently and didn't tell them what was going on, even more, didn't report it to the Privacy Commissioner, that's a very serious reputational risk. So, yeah, I think there are.
Well, I think all of us, if you're an Optus customer, you're probably experiencing it right now. So, just to mention one. Beck, I'm going to just come back to you for a second, talk about, we've got a lot of employers and directors on this particular panel session today. Are you okay to talk about the risks involved in engaging with offshore team members under a contract agreement, given the recent case study?
In relation to direct relationships?
Yeah, just in terms of, for companies that are currently dealing with offshore team members, I think the companies that I've spoken to, and certainly the ones that were at Hamilton Island we spoke to quickly, they're engaging them under a contractor agreement, but now things are changing because they should be under an employee agreement. And there's always been this.
Yeah, I mean, the catch-all that I believe that a lot of employers onshore in Australia believe that they will be able to avoid the definition and therefore the rights and responsibilities that come from an employer relationship is simply by renaming an employment agreement a contractor agreement. In the case of Pascua and Doessel Group, the document that underpinned the relationship was a contractor agreement. It was called contractor agreement. And the courts are reticent to simply accept that it's a contractor agreement because it's called a contractor agreement. So the courts are definitely looking at what they see as sham agreements, whereby in reality, if it looks like a duck and quacks like a duck and waddles like a duck, it is actually a duck. So the courts will not accept that it's a contractor agreement just by the mere fact that's what the document's called. They look at a number of different factors, some of the ones I've already talked about, but one of the really important pieces, and I think where using offshore companies like Profit Master, as long as you've looked into the fact that they are legitimate, that they are compliant, and obviously having the correct directorships over in the countries in which they are established is important. But it's all about vulnerability. And so where you have a country like Australia that is obviously quite a wealthy, well-established country with very strong laws established, and you are effectively going to a third world country in order to employ employees who maybe don't have the same types of level of rights and responsibilities as an employer in Australia, and potentially trying or seemingly trying to maximize on the fact that they are in a more vulnerable situation, paying them less, giving them less rights and protections, then the court will be very quick to try to prevent that from happening where there's been some type of unfairness occurring. And that is where you're going to fall foul of that recent decision that came out in February this year, where you use someone like a profit master who will ensure that, for example, in the Philippines, there's an obligation to provide medical insurance. Profit master makes sure that for all of their employees, there is medical insurance provided. There are a number of different requirements in the Philippines for employees that don't apply here in Australia. And so as long as those things are being adequately provided, then they will see it as what it is, which is a true contractor arrangement.
Okay. Are you okay to talk about the penalties that were imposed on the company where this Queensland-based company was obviously deemed that it was an employee relationship rather than a contractor arrangement? What was the decision from
so the penalties, which then also feed into Michael and what he's here to talk about today, was that this employer, who, I mean, luckily, unluckily for them, had only been with the company for just over a year, was that they needed to back pay that employer minimum wage standards for that employer's role. They had to back pay that employer for superannuation obligations. And in fact, it triggered a superannuation penalty from the ATO, which brings with it CGI implications and the like. So they had to also pay interest on the unpaid super and the unpaid PAYG. They were entitled to leave entitlements that needed to be paid out at the end of the period. There was unfair dismissal exposure, which means it can lead to penalties and fines, and that the sham arrangement penalties for individuals who employ can be up to $19,800. For businesses with fewer than 15 employees can be up to $99,000. And for businesses with over 15 employees, and of course, these employees that are defined as employees are not contractors who are offshore. Any businesses over 15 employees, you can be penalised and fined up to $495,000. So the exposure is real. There was also a decision that came out just 3 months ago. It was an Australian company employing Australian employees, a very large company. And that company was found guilty of underpaying employees. And the directors came to court with a very large company. I think they employed over 500 people, and said, look, we relied on our CFO and our payroll to get this right. And the federal court said, yeah, we're not buying that. We're not buying that excuse anymore. You are the directors. The buck stops with you. You need to ensure that people are being paid adequately. Back paying is not enough. We are now penalising you. And so the federal court has certainly changed its attitude in terms of penalties being applied to directors. And it's something we should all be extremely aware of as employers and as directors of companies. And those penalties, and this is obviously slightly off topic because that was about underpayments, it wasn't about this specific situation, were well over $1 million to each of those directors. And so it's something that the federal government, the federal courts, are taking very seriously and are applying the penalties and are not listening to excuses in the way that they used to. But maybe Michael can talk a little bit further now about the penalties that then apply through the ATO by non-payment of PAYG and super, and when they become personal liabilities of directors as well.
Yeah, well, I think the big thing where I think, you just mentioned the minimum AU wages applied. And then, of course, yes, depending on how long that individual was with the company, if they're with you for 5 years, well, it gets backdated to 5 years. And then, of course, you've got the implications with regards to entitlements and super and PAYG. So, yeah, Michael, I'll bring you in now, mate, because, as all three of you are company directors and owners, we've got plenty online. The management of cash flow from both an accounting and a financial perspective is very important. Managing our statutory obligations with the ATO. Mate, given what you do at Tax Assure, are you okay to share how the ATO are dealing with these debts at the moment? Because they're pretty high from what we heard over in August at Hamilton Island. You okay to take us through a little bit about that, and then talk about the ATO side with some of those ATO risks on super as an example? And I'll even ask Rich to come in to talk about how DPNs have been handled.
Yeah, absolutely. And, thanks so much for having me, and everybody for taking the time. Maybe just a little bit of background about Tax Offshore, so you know who we are and what we do. We help businesses that owe money to the ATO. We specifically deal with the debt piece, and where it's relevant to this obviously is that whilst we don't advise around the sorts of things that Beck's been talking about and Richard's hoping to solve through Profit Master for a lot of these businesses, we see it when it sort of falls out the bottom, and we've acted for businesses where there have been allegations of underpayments of obligations, not so much specifically in this context, but certainly in an Australian context, and these big debts fall out. But and again, I think we've got a few accountants on the sort of lines, but specifically in terms of what we do, we get in stop for businesses and individuals that owe money to the ATO, and we'll certainly talk about the individual piece in a minute, because that's relevant here from a director personal liability perspective of things falling out of what we've been talking about for the last sort of 20 odd minutes. But specifically, we get in stop legal recovery action against businesses and directors. Never been more important. I'm sure the accountants on the line will be with me when they say the ATO are very aggressive at the moment and going very, very hard. We've been doing this for 12 years. And, if this is kind of how hard they were going, I sort of look at it in terms of pre and post COVID, because that's kind of where there was a bit of a shift. If they were going this hard during COVID, well, then it was on the floor during COVID. But now we're kind of up here. It's a very tough time to owe money to the ATO. So we get in, stop the legal recovery action, negotiate sustainable payment terms. And again, there will be debts that will fall out of these sorts of things, because this will come out of an audit by the ATO as to whether or not appropriate super's been paid, whether appropriate PAYG withholding's been paid. And then we get in, the other piece we do is to look at reducing interest and penalties. And again, very, very relevant to this conversation. And just as a side, and it's probably beyond the context of this, but we also, for businesses that owe money to the ATO, get in to renegotiate existing payment plans that may not be optimal anymore, and causing the business certainly some issues. In terms of how we got where we are with the ATO, and it's no more complicated than a numbers game. Prior to COVID, there was around $26 billion owing to the ATO, 2/3 of that by small business. So we're not talking necessarily about the big end of town. Officially, it's over 56 billion. We think it's well in excess of $60 billion. And that's been brought about largely because of, the obvious things. As I've mentioned COVID a couple of times, even though from the ATO's perspective, COVID's been well and truly over, from a business perspective, from their end, it certainly is still impacting many, many businesses, and there's a lot of legacy debt around that. We've had floods, fires, all the usual economic downturn. So there is a lot of businesses out there that have never had ATO debt, that have ATO debt now. Also, we are seeing that the average debt, certainly the ones we are seeing in our client base, hasn't changed dramatically. Is almost doubled. Our average debt that we used to deal with was around the $400,000 mark. It's now pushing the $1 million mark, and we're certainly seeing many, many businesses with debts in excess of $1 million. So there's a lot of pressure on the Commissioner to do a couple of things. One is to bring that debt level down. They can do it two ways. They can collect it, and that's what they'd love to do. But if they can't do that, they will write it off, and they do that by winding businesses up, and they're very active in that, certainly winding up so the ATO have well beyond sort of pre-COVID levels. And they're smashing directors personally along the way and taking, and there's liquidations in homes and so forth that are at risk around all of that. So they're also keen to get businesses compliant again. And I think there's also and this is something we've been sort of told, probably unofficially, but I don't think it's a secret. They're trying to send a message to businesses out there that the ATO is not to be used as a cheap and easy source of finance. And it's not cheap if you owe money to the ATO, and it'll be, again, relevant to what we're talking about here. The interest on that is 10.61% compounding daily. So that's not a cheap rate. It got a little bit more expensive from 1 July this year, because also that is no longer tax deductible. So depending on sort of your tax position, that will go up around about 30% in terms of that. But it's also not an easy source of finance. And I often say this to people in the sense that, excuse me, it's easy to get the debt. It's easy to get the loan, if you want to call it a loan, because you just don't pay your tax. But it's not easy to get out the other side of it. And it's very, very dangerous. And it puts a lot of businesses at risk. The ATO are tougher on payment terms. The ATO are tougher on the removal of the interest and penalties. And again, the accountants on the webinar, I'm sure, will agree with all of this. And excuse me. Sorry, I've been in bed for the last 2 days with the flu. Codral is my friend at the moment and is keeping me making sense and keeping the head clear. So excuse me if I cough and splutter a little bit. But what the ATO is doing, the ATO have legal practice statements that need to be complied with if you want to do any of the things that we've been talking about in terms of payment terms, removal of interest and penalties. They are now requiring strict compliance with those, and that is making it a lot more difficult. And we're seeing a lot of accountants who are coming to us and saying, we would normally have got this through, but they're asking for all this information, and we've been refused. And I look at a lot of the applications every day, and they would have been approved maybe 12, 18 months ago, but they're not now, and they're not compliant, and they're not capable of being approved by the ATO. So we're doing a lot around that. So, it's a tough time, as I said, to owe money to the ATO. They've got some very strong recovery powers in terms of credit reporting, garnishee notices, director penalty notices, and we'll talk about that in a little bit more detail as it relates to this, and obviously winding ups. But certainly the director penalty notice part of it is extremely relevant here, because one of the things when we did this at Hamilton Islanders, there were businesses that, we just, we'll take the risk. And if it happens and it goes bad, well, that's life and we'll deal with it in the business. And we've got a business and my personal assets are secure. Not the case with the ATO. And if you have unpaid super and unpaid pay-as-you-go withholding, then the ATO can come after and GST for that matter, can come after the directors personally. And depending on how it sits, and we'll talk a little bit more, there may be no way to get out of that personal liability. But look, it's not all doom and gloom. The ATO will deal with businesses that have debt with the ATO. We're helping, dozens of businesses every week around all of this. And if you engage properly and engage quickly and engage in ways that the ATO can approve, and otherwise you get computer says no, for those that remember the Little Britain series, then you can get good outcomes with them.
And I think that was an important point that got brought up at Hamilton Island. And Rich, I'm going to come to you, given your experience in the insolvency space in a second on the DPN side. But I can remember someone asked a question with regards to, I think Beck, you answered it in terms of now that this has been out for more than 12 months, Rich mentioned August last year. So it's been out for more than 12 months. If you're just going to bury your head in the sand and do nothing about it, as opposed to being proactive in doing something about it, well, there's a different decision that could come out, isn't there, Beck?
Yes, definitely.
So it's important to do something rather than do nothing, and hopefully you're not targeted.
Yes, because what Mike was talking about is obviously trying to reduce the pain, but the ATO, as Mike was also mentioned, is not the toothless tiger it was during COVID. It is simply issuing court proceedings, winding companies up, and bankrupting people, not to scare people on this Zoom call, but that is the reality. And Michael, you would be seeing a lot of it.
Yeah, look, and I think the issue around this is that, and Richard, you made a comment before, a lot of this is case by case, but we've got the Fair Work Commission case that's said that this employee was a employee for Australian employment purposes, and the ATO also will have a view on that as to whether they were an employee for Australian tax purposes. And this is where the risk comes in, is if you're an employee for Australian tax purposes, then there are obligations not only to back pay all the pay which comes out of the employment side of things, but as every employer on this webinar knows, you have to pay superannuation. If you don't pay the superannuation, in this case it was backdated, not only do you have to pay the superannuation and the interest that goes with that, so that the employee is put in the position they would have otherwise been with their fund, but there's what they call Part 7 penalties, which are up to 200% of the tax of the unpaid super. So if there's $100,000 in unpaid super, the penalties can be up to $200,000 for that one employee. And so again, depending how far we're going back, these numbers can grow very, very quickly. Now, there are grounds to have those penalties reduced, and one of the things around that would certainly be what has been done. And one of the things the ATO, for example, on this, if there is an issue, if you come to them rather than them coming to you, the outcome is very, very different. The other major area is obviously unpaid pay-as-you-go withholding. Again, that's what for the employers, most employers will know that is. It's the bit you take out of people's wages when they when you pay them every whether it's fortnightly, monthly, or whatever it might be. And again, there's an obligation for the employer to withhold those and pay them directly to the ATO. And if you don't, then again, not only do they backdate them, but they backdate them to when the periods they should have been. And on top of that, they apply general interest charges. That's the number I talked about before, 10.61% calculated daily. So again, we see many, many clients and they say, look, we've got a $100,000 debt, but it's gone back 10 years. And that $100,000 debt's now a $500,000 debt. The thing that I mentioned before, there'll be there's a really strong potential for payroll tax issues as well, because if they're employees and you haven't been paying payroll tax and that puts you over the thresholds, then there's that, and again that carries interest. The big issue too is not only is, and this is what we talked about before, not only is for those that want to put their head in the sand and say, well, look, we'll deal with it, and if it becomes a problem, then we'll deal with it from a company level. But there is a director penalty regime which makes directors personally liable for these debts. There's two types of director penalty notices, and a lot of people will know about this, but for those that don't, there's one which they call a standard director penalty notice, which essentially gives a director a get out of jail free card, which says if you put the company into some sort of external administration, then they will remit the penalty against the director personally. There's another type that was brought in, and these are not new, these have been around for a long time, and it was brought in essentially to stop a lot of the labour hire companies who would not report these things and then liquidate the company, and the ATO didn't know about them and didn't have a chance to actually have a crack at the directors. So if you not only don't pay these amounts and these non-payments, and it might be some have paid and it might be none is paid, or there's underpayments of these taxes, and super's not really a tax, but it does become one if you don't pay it. Then if you don't report them, and there are strict timeframes around that, and it's essentially 3 months for pay-as-you-go withholding, and for super, it's the date that the superannuation guarantee charge is due, which is a month and 28 days after it's due, then you get a thing called a lockdown director penalty notice, and there's nothing the director can do to get out of that other than pay it. So this is where it becomes really tricky. Now, if we're talking about amounts that are getting backdated, and you're a director and you didn't even know about this, doesn't matter from the ATO's perspective. It's more than 3 months, or it's more than 1 month and 28 days. So it means that you get one of the lockdown ones, and therefore it doesn't matter what you do with the company, whether you wind it up or put it through a small business restructuring and all the things that people are doing at the moment. The director's on the hook, and the ATO can and will pursue the directors personally. We've seen quite a lot of that at the moment. The ATO, about 12 months ago, issued a bucket load of director penalty notices and did nothing with them. And they were doing it to get directors to engage, and it worked. And a lot of directors paid it back, paid the tax, will cause the company to pay the debts. And if a parallel liability with the company, and every dollar the company pays comes off the director's liability, but a bunch didn't. And we're seeing quite a lot of directors at the moment coming to us with a statement claim, and the ATO is suing them, and they're pursued to bankruptcy. And so it's no longer just your business is at risk, it's your house that you've spent the last 30 years paying off that's now at risk, and anything else you've got in your own name.
Rich, is there anything you'd like to add to that?
I think this is probably one of the things that came out from the Profit Master Conference up at Hamilton, and I was sitting in that actual discussion as an observer when Michael and Beck gave their presentation. And I hadn't, and I'm an accountant, the penny had not dropped for me until we had this discussion, and I was listening to these guys, that if you get caught under the exact legal case that we're talking about, and you're faced with a situation where you have to back pay an employee who you thought was a contractor, you have to back pay an employee for some considerable period of time, then PAYG applies. There is, because you haven't remitted, there's a high risk that you're looking at a lockdown DPN going back over quite a considerable period of time, and there's no way you can get out of it. Now, if you're handling one employee, one employee, I'm using that term purposely here now, but if you're employing one employee, that might be okay. But if you've got a team of 10 or 20 or 30 people who are actually working directly, that's a very serious implication for your personal financial position. And it wasn't until I sat and listened to Beck and Michael talking about this that the penny actually dropped on me. So I imagine that there's a lot of people out there, other accountants included, and company directors, who are only just now finding out what the potential risks are that we're talking about here.
True. So true. Beck, can I come back to you for a sec? Because I know in the conversations that I have with a lot of people, I know this contractor versus employee discussion has been going on for years. I know dealing with a lot of accounting firms over the years, I know myself, I go through it as well. My accountant always talks to me and tries to explain to me, where do you sit? Are you okay to as quick as we can, go through what defines a contractor and what defines an employee? Because it's James Hay trying to call me. He should know I should be on this. So what defines a contractor or an employee? Because I think the way you explained it again at Hamilton Iron was very, very good.
Well, I think that the law is not what you'd like it to be. There is greyness there. So there's not a definitive Australian case that directly addresses whether Fair Work protections can pierce through the legitimate employer on record agency agreement to reach the end client. But there are recent cases that provide pretty strong indicators about how courts would likely approach this issue. So there was a case called Akira Dental and Creative Smiles. It's a Victorian Court of Appeal decision which found a dentist was an independent contractor despite working as the practice principal, because there was commercial context that showed the parties were working in their own self-interest during an earn-out period following a business acquisition. There were no wages or salaries ever paid for the management work that he did. The person worked on his own behalf at his own risk. Services were provided to his clients, not the company. And the individuals were required to indemnify the company for liability. So a lot of it is around the way that the contractual relationship operates. Similarly, there was a case of Lucy Helft versus Top of the Town, which some Victorians might be aware of, that business. But she was a sex worker, and she was found to be a contractor because she had control over the fundamental elements of her work, which was she elected when she was going to work. She had the ability to decline shifts. She had a right to refuse certain clients, and she had discretion over pricing. And so on the flip side, there was another sex worker case called the Trustee of New Hope's Trust. That relationship was defined as an employee relationship because it differed. The employer exercised significant control over the sex worker through policies dictating appearance, shift times, room preparation, and service standards, and fines were imposed for refusing certain clients. Late arrivals, they got fined for. Leaving shifts early, they got fined for. So the consideration in that one was that the workers were integrated into the business and were dependent on the employer for work. They couldn't bring their own clients into that environment. And so the takeaway really is that the labels and the documentation cannot overcome the practical reality of the control and integration. So it's all about control. And it's all about integration. So I know that there was a question that was asked prior to today's webinar around that issue, and that's why I looked a little bit more deeply into that issue specifically in the case law around it. There is not a case specifically on point, but every case will be determined on its facts. And really, it comes back to that duck analogy. If you're effectively operating as an employer with an employee with all of these rules and regulations, policies, procedures, and specifically around set hours and set policies and procedures that they must adhere to, together with things like the email address and the way that they're presenting themselves. That came out a lot in the Pascua and Doessel Corporation's case. She was holding herself out to be an employee of that company and someone that was being managed and controlled by Graham Doessel. And a lot of her emails said that. I'll have to go back to my boss. I'll have to speak to my boss. So it really has to be on a case-by-case basis. And we're always available if you want to pick up the phone and give us a call and say, look, I'm a little bit concerned about this being line ball. How would I fix this up? Then we're more than happy to provide that advice.
Brilliant, brilliant. Let's go back to that analogy of the duck. So if it looks like a duck and smells like a duck and quacks like a duck, it probably is a duck. So Rich, to you at Profit Master, mate, what's the solution?
Look, the first question, are you asking of the solution to direct hire and minimising the risks associated with this? And if you accept that, okay, well, one of the alternatives is employee of record, then obviously there are some solutions within that employee of record that employer of record to consider. But probably the simplest way is to say, well, organise a good, solid service agreement that provides a strong relationship between the Australian company and the offshore company, including things like, operational management, HR management, payroll management, internet management, and office facilities and all that sort of stuff. That's the way the Profit Master works in general. In fact, more than 90% of our staff are engaged under that sort of offshoring contractual arrangement. But in relation to the staff that we are engaging as employer of record, there's probably a couple of things that you need to concern, and Beck mentioned it and I mentioned it, which is that one size doesn't fit all. But I think that if you're going to work with an employer of record provider, there are a couple of things that you need to consider along the way, and they can broadly be talked about as the contractual safeguards and then operational practice and governance and compliance. Now, not everything will fit in if you're talking about a pure employer of record arrangement, and you've got to just assess the risks of each situation that you've got and say, am I prepared to take that risk, or do I have to consider that too high a risk for me to be able to take? But things like just making sure that your service agreements clearly identify what the obligations of the parties are, and that the agreement really just affirms that the employee of the employer of record company is not your employee, and the fact that the offshore company controls the relationship with the staff member in terms of leave, their benefits, termination, and so on, even though they might be consulted with the client in Australia. And then from an operational point of view, it would be good to be able to avoid direct supervision or avoid having email signatories that are directly related back to the company in Australia. But some of those are just not practical. So you're then talking about things about whether something that is you've engaged in is a low risk or a reasonable risk or a high risk. And if there's too much high risk, you've obviously got to take a different way. And that's why I mean by one case does not, one structure does not fit all. You have to look at each individual one. Yeah. So there, from an operational point of view, and then also from a governance and compliance point of view, who's got the employment documentation versus the service agreement arrangement, what is the government registration and so on and things like that.
Okay, and that's something obviously.
So I think look at them, and that's where Beck really comes in. I mean, she's a specialist employment lawyer, is to be able to sit with her and say, this is what I'm working on. Is this going to work? And manage it to make sure that it does.
Brilliant. Brilliant. Thank you. Thank you. Now, to everyone online, we've just got to 12:50, so I'm about to go to questions. I've got a number of questions to work through. Just before I do that, I'm going to send you guys a quick poll. So to the team that's activating that, can you do that for me, please? So to all of you online, that if you can please jump onto the poll and quickly answer some questions for us, that'd be great. Now, if you've got questions and you want to ask them, please jump in there and go to the questions. I've got some questions. One that was given to me earlier, so everybody was had the ability to actually throw us some questions upon registration as well. So I've got one here that I'll read, and I think, Beck, you were referring to this before. This is from Kate. So I've read several highbrow legal opinions that in summary state that even EOR, so employer of record, or agency arrangement wouldn't be a protection where the statutory employee be challenged with any gusto. The candidate works in your business, writes email address, uses your logo, is controlled by you, and is therefore your employee. And entitled to all rights and protections under the Fair Workers, including minimum wage, which is my biggest gripe. Has there been any legal test or precedent set or challenge made in that space? Sorry, that was a big question.
This is someone who is being employed, is a contractor who's being employed offshore, or this is someone she's employing onshore?
No, I'm assuming it's someone that's offshore, that to go to what Rich mentioned, which was an employer of record, that are there still challenges there in that process. Although Kate's not online, unfortunately, to ask us that, she couldn't make it today.
Right. Okay. So there, as I explained at the beginning, there's only one case on point at the moment, and the Pascua and Doessel corporations case was where Doessel had directly employed Pascua. So Graham Doessel had not used an offshoring company to either source her or to employ her. And so that was a large factor in whether or not she was determined to be an employee under Fair Work Australian definition. And she was, because it was a direct relationship. It didn't have an intermediary. And our advice reading that decision is that if there is an intermediary like Profit Master that is properly established in the country in which that person lives, and that person has a contractual relationship between itself and Profit Master, and then Profit Master is contracting that person out, and Profit Master complies with all of the laws of the land in the Philippines, and obviously complies with the laws of the land in Australia when they're on contracting them, then I believe it will not matter that that person holds themselves out to be to have a title with an email address, because that is a normal way in which they need to operate and work. They don't need to tell the world out there, oh, I'm operating as a contractor from the Philippines through Profit Master, but now I work for ABC Corp. It's not important for that to be in place, but the relationship, the contract between the employee in the Philippines and Profit Master is essential. And then the agreement between Profit Master and the company is essential. And then obviously the contractors that they take on board from time to time is also essential.
Okay. Thank you.
And you tick those boxes, and I believe you will not fall foul of the legislation or the case law as it stands at the moment. The question of vulnerability will always come into it because of the different socioeconomic countries that we're dealing with. But as long as you are using an offshoring company like Profit Master that ensures that all of the local laws are being complied with and that that person is being well looked after, then I don't believe you'll fall foul of that either. It's just important who you use as your offshoring agent.
Yeah, good point. Another question, what are the employer's obligations and compliance requirements when hiring offshore workers through an agency or provider?
What are the, sorry?
Employers' obligations and compliance requirements when hiring offshore workers through an agency like a profit master. I'm assuming the person meant agency or
Well,
provider.
going back, without repeating myself, going back and making
Yeah.
sure that that offshoring agency is complying with the laws of the land in the Philippines.
Philippines.
And that it's not just a sham, that it's not just an agency arrangement that exists solely on paper, that it absolutely looks and behaves like a proper agency relationship. There are two separate agreements, one with the company in Australia and Profit Master, another where you would want to see the Profit Master agreement with that end contractor, that the payroll is not a direct payroll situation. The payroll goes via Profit Master and is handled by Profit Master. And that the agency arrangement is properly established.
Yep. Good point.
Can I add to that, Paul?
100%.
Yeah. So what Beck has spoken about is I agree completely with, because it's two separate arrangements. It's one between, to use Profit Master, for example, one between the company in Australia and Profit Master. That's one contract. The other one is a contract between an employment contract between Profit Master and the employee. Totally separate. But one of the other things that's worth considering here in terms of compliance obligations and so on is not only the legal parts of that contract between Profit Master and the Australian company, but also, if you're an accounting firm, for example, the ethical obligations that you're required to have in relation to dealing with offshore staff, they exist, and you need to comply with that. But then there are also some labour regulations around modern slavery and things like that, which also come into play. Now, normally that wouldn't occur with a professional relationship like accountants and administrative staff, legal staff and things like that. But it can. I mean, one of the things that we have to certify as part of our labour requirements here in the Philippines is that we have to be able to certify that we're not involved in any of that sort of thing, money laundering, labour hire, money laundering, modern slavery and things like that. Now, it might be easy to say, oh, well, I'm dealing with a high-level professional organisation, and we hold ourselves out to be very much like that. But the Philippines and other countries are different jurisdictions to what we expect as normal in Australia. So you should still consider those and just sign off on things like that. That's still part of your obligations.
Yeah, very true.
Yeah, and just adding to that, another key element to it all, and we can give case by case advice. It's difficult to give generic advice when there's lots of different types of workers that you might be seeking Profit Master source for you, is the scope of works is very important. So that you provide Profit Master with a very clear project requirement. What is it that you're requiring? And that you are not day-to-day supervising that contractor. That is a task that if there is a HR issue or a day-to-day supervision issue, that issue comes back to Profit Master for Profit Master to help you navigate. It's not something that you would then pull that person into your HR division and effectively treat them just like any other employee. They need to be treated differently, and that is where Profit Master, I suppose, earns its money more than anything else. But there's a lot of work to be done so that contractor can still be seen truly as a contractor.
It's a very good point. So I've got a question here. So if the company, now aware of these changes, moves the employee to an employer of record, are they protected from a wage claim from Fair Work? The question goes on to ask, they could have had the employee for a long period before becoming aware of this. So will they be protected?
Well, I mean, once again, that's going to have to be on a case-by-case basis. So it's difficult for me to give advice about that right now. Yep. There are ways and means to do it so that you can do it in a successful manner, but effectively you are changing that employee's or that contractor's relationship with you. So yes, you can, but you would have to pay out that employee's entitlements up to a certain point in time. It would be my advice that you make an ex gratia payment to that employee so that they waive certain rights that they might have had, have a proper drafted deed that finalizes that prior contractual relationship that might have problems with it because of the Doessel case. And then you move to a profit master type model, and you give them all the opportunities to go and get their own independent legal advice and to sign that agreement, understanding their relationship, their contractual relationship is now changing from contractual relationship A to contractual relationship B. And these are the different things that are going to be happening in relation to A versus B.
Yep. Here's a quick one that I'll cover off. So it's a great content. Thank you very much. Just a query with relation to when there was a minimum wage requirement. Was that based in Australian rates or the country of the employee? It was Australian rates.
Australian rates.
Yep.
And that is the problem. It was Australian rates. So he was paying, in fact, he was underpaying in the Philippines, and that didn't help with the decision, by the way. In fact, I know the individual who the case was against, and I probably understand why the judge wanted to throw the book at him, but that's a separate issue. But yes, it will be on a case-by-case basis, but it was the Australian employment laws, and that is the real problem here. Some people can have 20, 30, 40 people that they directly employ in this model. They could find themselves falling foul of this if one of those employees elects to go off and make a fair work claim. And as I've worked with a lot of companies with Indian offshoring, Philippines offshoring, and Fijian offshoring, and the cultural difference there is that they're very proud of the company that they work for. They love working for Australian companies because they're on the same or similar time zone and they don't have to work for American companies overnight. And they often encourage their friends and family to come and work with them as well. So if one of them makes a fair work claim and gets up on it, you can bet London to a brick that 5, 10, 15 of them will go, oh, Auntie Joe just did this. Let's all jump on the bandwagon. So there are some businesses that are quite exposed. We are very knowledgeable in this area. We can help you through and navigate so that you can restructure it and use a company like Profit Master to help you navigate this problem if this is the way that your business is operating right now.
Yep. Thanks, Beck.
No
I'll just share one more because it is 4 minutes past 1, so just conscious of time for everybody. There's one here from Robert White. I engaged an outsourced audit firm. They are the firm that engages the staff. How does your scenario relate to an Australian accounting practice engaging overseas firms?
So the outsourcing audit firm provides auditing services offshore. I don't want to repeat myself, but it would come back to how well that offshoring auditing company complies with the laws of the land of that country. That there is no sham arrangements, that the employees offshore are not in any kind of vulnerable situation, and that we are not in any way with the onshore Australian company exploiting that. Yes. Because of the differentiation of wages and payment, we need to be very careful that they are being properly looked after in the country of residence under those laws.
Yep. Yeah, well said.
Paul, if I could just add to that, please, because we actually have quite a strong audit firm here in the Philippines. I've struck audit business here in the Philippines, and I'm a chartered accountant with a practicing certificate and so on. But that's not relevant to this. I don't think it's relevant to this particular question. But Robert, if you have a different view, come back to me sometime. I suspect that what Robert could be talking about is superannuation audits. If it's a company audit, usually there would be an offshoring model as opposed to an outsourcing model. So the offshore staff would be engaged through us, but they would be, it wouldn't be an outsourced model where it's a particular task or something like that. They would bring people in to run through the audit season and work on particular audits and so on. But from an SMSF point of view, I mean, that happens quite regularly where you've got a superannuation audit provider in Australia who is that has been outsourced by the accounting practice, and that audit firm is using offshore staff. There's no problem with that, providing you're compliant with the standards on the ethical standards and professional standards on offshoring and on advising your client and so on. But providing you meet all the other standards around security and everything like that, there's no real problem with that. If it was an insolvency arrangement, that's different because that has an implication on costs. But in audit, it's still okay. But Robert, if I've missed some facts there, please come back to me and I'm happy to have a chat to you about it.
Yeah, thanks so much. Look, just in sort of wrapping up, I know, Beck, you sort of mentioned it before in terms of how do people find you if they want some more advice? What's the best way to connect with you at SLF Lawyers?
SLF Lawyers, jump online. My email's there. My mobile phone number is there. Just reach out and I'm more than happy to come back to you.
Magnificent. Thank you. And Michael, the same for you, mate. What's the best way? You've got companies out there or accountants that may not have heard of you. I'm not sure many that wouldn't have, but there are some out there that have got clients with some ATO challenges. How do they reach out to you, mate? How do they find you?
Yeah, it looks exactly the same. We're online. All the details are there. We've got a YouTube channel if you want to learn a bit more about us as well. So yeah, just pick up the phone or drop me an email.
Beautiful. And Rich, what's the best way to contact you?
Through you, Paul. So look, I've just enjoyed this so much. So I just saw a note come through from Kate. Tax Assured is amazing. So if you want to contact me, contact Tax Assured first. And look, if I can only just say that both Michael and Beck, what an amazing topic, and to bring the level of professional insight into that has really been valuable. I just think thank you so much for the time that you've made available on this. To me, obviously, and to us at ProfitMaster, it's a very, very important issue. And I really hope that everybody else has enjoyed it as much as we have. I thank you so much for not only the time here, but also the time you've given us, me and us, over other periods of time. Thank you.
Yeah, great. And I think the again, there's a number of comments in there and questions. So thank you to all of you joining us. To Michael, to Rebecca, thank you. Rich, thank you. Signing off till we see you next time. Please enjoy the rest of your day.
Sounds great.
Thanks.
Thanks,
See you,
guys.
everyone.
Bye.
Thank you.